Theory questions of SFM RTP. We will start with question number 14a. Briefly explain the concept of exchange traded fund. Second is purchasing power parity. Third is reverse stock split. And then benefits of securitization from the point of view of originator. Explain briefly the parameters to identify the currency risk. And last is compare and contrast startups and entrepreneurship. Describe the priorities and challenges which startups in India are facing. Exchange traded funds were introduced in US in 1993 and came to India around 2002. It is a hybrid product that combines features of an index fund, index mutual fund, and stock. Hence, is also called index shares. These funds are listed on the stock exchange, and their prices are linked to the underlying index, The authorized participants act as market makers for ETFs. ETFs can be bought or sold like any other stock on stock exchange. In other words, they can be bought or sold anytime during the market hours at price that are expected to be closer to the NAV. At the end of the day, NAV of an ETF is the value of the underlying component of the benchmark index held by the ETF plus all accrued dividends less accrued management fees. There is no paperwork involved for investing in an ETF. These can be bought like any other stock just by placing an order with the broker. Some other important features of ETF are as follows. Commodity benefit without physical. It gives an investor the benefit of investing in a commodity without physically purchasing the commodity like gold, silver, sugar, etc. Administrative cost physically not needed. Second point is it is launched by an asset management company or other entity. Third is the investor does not need to physically store the commodity or bear the cost of upkeep, which is part of the administrative cost of the fund. An exchange traded fund combines the valuation feature of a mutual fund or the unit investment trust, which can be bought or sold at the end of the trading day for its net asset value with the tradability feature. With the tradability feature of a closed-ended fund, which trades throughout the trading day at prices that may be more or less than its net asset value. Purchasing power parity. What is purchasing power parity? Purchasing power parity is inflation in purchasing power parity theory focuses on the inflation or exchange rate relationship. There are two forms of PPP theory, absolute and relative. Absolute is law of one price of similar product in two different countries shall be same, measured in common currency. When measured in common currency, price shall be same in two different countries. Demand should shift from price converge if discrepancy. Relative form is an alternative version that accounts for the possibility of market imperfections such as transportation costs, tariffs, and quotas. It suggests that because of these market imperfections, prices of similar products of different countries will not necessarily be same when measured in a common currency. However, it states that the rate of change in the price of products should be somewhat similar. Rate of change in the price of products should be somewhat similar when measured in a common currency as long as the transportation cost and trade barriers are unchanged. The formula for computing forward rate using the inflation rates in domestic and foreign countries is as follows. Forward rate is equal to spot rate into 1 plus domestic index upon 1 plus foreign inflation index, where F is forward rate of foreign currency and S is spot rate. This PPP theory states that the exchange rate between two countries reflect the relative purchasing power of the two companies, that is, the price at which a basket of goods can be bought in the two countries. Purchasing power parity, exchange rate of two countries, relative purchasing power, pricing of basket of goods can be bought. Is what is purchasing power parity. Next is reverse stock split. Reverse stock split is a process whereby a company decreases the number of shares outstanding by combining current shares into fewer or lesser number of shares. For example, in a 5 to 1 reverse split, a company would take back 5 shares and will replace them with 1 share. Although reverse stock split does not result in change in market value or market capitalization of the company, but it results in increase in price per share. Considering above mentioned ratio, if company has 100 million shares outstanding before split, the number of shares would be equal to 20 million after the reverse split up. Reason for reverse split up are generally company carries out reverse split up due to the following reasons: avoiding delisting from stock exchange, avoiding removal from constituents of index, to avoid the tag of penny stock, to attract institutional investors and mutual funds. Avoiding delisting from stock exchange, sometimes as per the stock exchange regulation, if the price of shares of a company goes below a limit, it can be delisted. To avoid such delisting, company may resort to reverse stock split up. Avoiding removal from constituents of index, if company's shares it's one of the constituents of market index, then to avoid the removal of scrip from this list, the company may take reverse split up route. To avoid the tag of penny stock, if the price of shares of a company goes below a limit, it may be called penny stock. In order to improve the image of the company and avoiding this stage, the company may go for reverse stock split. To attract institutional investors and mutual funds, it might be possible that institutional investors may be shying away from acquiring low value shares. To attract these investors, the company may adopt the route of reverse stock split to increase the price per share. Originator के point of view से benefits of securitization. Entity which sells assets collectively to SPVs originator achieves the following benefits from securitization: off balance sheet financing, more specialization in core business, helps to improve financial ratios, and reduced borrowing cost. Off balance sheet financing is when loans or receivables are securitized. It releases a portion of capital tied up in these assets, resulting in off balance sheet financing, leading to improved liquidity position, which helps expanding the business of the company. More specialization: by transferring the assets, the entity could concentrate more on core business as servicing of loan is transferred to SPV. Further, in case of non-recourse arrangement, even the burden of default is shifted, helps to improve financial ratios, especially in case of financial institutions and banks. It helps to manage capital to weighted asset ratio effectively. Capital to weighted asset ratio effectively. Reduced borrowing cost. Since securitized papers are rated due to credit enhancement, even they can also be issued to reduced rate as of debts, and hence the originator earns a spread, resulting in reduced cost of borrowing. Hence the originator earns a spread, resulting in reduced cost of borrowings. Next question: what are the parameters to identify currency risk? Are as follows: government action, nominal interest rate, inflation rate, natural calamities, war, coup, rebellions, etc. Change of government. Government actions में the government action of any country has visual impact in its currency. For example, UK government decision to divorce from European Union, that is Brexit. brought the pound to its lowest since 1980s. National interest rate, nominal interest rate is as per interest rate parity (IRP). The currency exchange rate depends on the nominal interest of that country. Inflation rate is purchasing power parity theory impact the value of currency. Natural calamities. Any natural calamity can have negative impact. Wars. Like all these actions can have a reaching impact on currency exchange rate. Change of government. The change of government and its attitude towards foreign investment also helps to identify the currency risk. What is the difference between a startup and an entrepreneurship? Startups are different from entrepreneurship. The major difference between them have been discussed in the following para. Startup is a part of entrepreneurship. Entrepreneurship is a broader concept and it includes a startup firm. The main aim of startup is to build a concern, conceptualize the idea which it has developed into a reality, and build a product or service. On the other hand, the major objective of an already established entrepreneurship concern is to attain opportunities with regard to the resources they currently control. A startup generally does not have a major financial motive, whereas an established entrepreneurship concern mainly operates on profit financial motive. Priorities and challenges which startups in India are facing. The priority is on bringing more and more smaller firms into existence. So the focus is on need based instead of opportunity based entrepreneurship. Moreover, the trend is to encourage self employment rather than large scalable concerns. The main challenge with the startup firm is getting the right talent, and paucity of skilled workforce can hinder the chances of a startup's organization growth and development. Further, startups had to comply with numerous regulations which escalate its cost. It leads to further delaying the chances of a break even or even earning some amount of profit. RTP for November 2019 is done. Let's take May 19 RTP for theoretical questions. Explain the concept of side pocketing in mutual funds. Explain cash settlement and physical settlement in derivative contracts and their relative advantage and disadvantage. Explain the importance of IRDA. Explain co-location proximity hosting. Describe the factors affecting industry analysis. Explain the need for finance in case of a MSME unit. Describe the process for arrangement of finance in the case of MSME. What is side pocketing? In simple words, side pocketing in mutual fund leads to separation of risky assets from the investments and cash holdings. Risky assets को separate करना cash holdings से and other investments from other investments and cash holding. The purpose is to make sure that money invested in a mutual fund, which is linked to stressed assets, gets locked until the funds recovered from the money from the company or could avoid distress selling of illiquid securities. The modus operandi in this is simple. Whenever the rating of a mutual fund decreases, the fund shifts the illiquid assets into a side pocket so that the current shareholders can be benefited from the liquid assets. Consequently, the NAV of the fund will then reflect the actual value of the liquid assets. Side pocketing is beneficial for those investors who wish to hold on to the units of the main funds for long term. Therefore, the process of side pocketing ensures that liquidity is not the problem, even in the circumstances of frequent allotments and redemptions. Side pocketing is quite common internationally. Side pocketing is quite common internationally. However, side pocketing has also been resorted to benefit the investors of genuine returns. In India, recent fiasco in the infrastructure, leasing, and financial services has led to many discussions on the concept of side pocketing, as ILFS and its subsidiaries have failed to fulfill its repayment obligations due to severe liquidity crisis. The mutual funds have given negative returns because they have completely written off their exposure to ILFS instruments. The modus operandi is simple. Whenever the rating of a mutual fund decreases, the fund shifts liquid funds into a side pocket so that current shareholders can be benefited from the liquid assets. Consequently, NAV of the fund will then reflect the actual value of the liquid assets only. Side pocketing is beneficial for those investors who wish to hold on to the units of the main fund for long term. Therefore, the process of side pocketing ensures that liquidity is not the problem even in the circumstances of frequent allotments and redemptions. Next question is on physical settlement in case of derivative contracts. Means that underlying assets are actually delivered on a specified delivery date. Actually delivery हो रही है specified delivery date पे. In other words, traders will have to take delivery of the shares against position taken in the derivative contract. Delivery लेनी पड़ेगी आपको, आपके घर पे आएगा शेयर, रखना पड़ेगा हाथ में. In case of cash settlement, the seller of the derivative contract does not deliver the underlying asset but transfers the cash. It is similar to index futures where the purchaser who wants to settle the contract in cash will have to pay or receive the difference between the spot price of the contract on the settlement date and the futures price decided beforehand, since it is impossible to effect the physical ownership of the underlying securities. The main advantage of cash settlement is in derivative contract is high liquidity because of more derivative volume in cash segment. Moreover, the underlying stocks in derivative contracts has constricted bid-ask spreads, and trading in such stocks can be effected at a lower impact cost. If the stock is liquid, the impact cost of bigger traders will be lower. Further, an adverse move can be hedged. For example, the investors can take a covered short derivative position by selling the future while still holding the underlying security. Also, a liquid derivative market facilitates the traders to do speculation. The speculative trading may worry the regulators, but it is also true that without speculative trading, it will not be possible for the derivative market to stay liquid. So, this leads to some arguments in favor of physical settlement in derivative contract. One advantage of physical settlement is that it is not subject to manipulation by both the parties to the derivative contract. This is so because the entire activity is monitored by the broker and the clearing exchange. However, one main disadvantage of physical delivery is that it is almost impossible to short sell a stock in the Indian market. Therefore, in the end, it can be concluded that though physical settlement in derivative contract does curb manipulation, it also affects the liquidity in the derivative segment. तो बेसिकली मतलब शेयर्स को ट्रेड कराने का ये रहता है कि लिक्विडिटी बनी रहे, भले ही स्पेक्यूलेशन हो. The physical settlement in case of derivative contract means that underlying assets are actually delivered on the specified delivery date. In other words, traders will have to take delivery of the shares against position taken. In case of cash settlement, seller of the derivative does not deliver the underlying asset but transfers the cash. It is similar to index future. अच्छा कैश देना पड़ता है आपको पूरा, मार्जिन पे नहीं ले सकते. It is similar to index futures where the purchaser who wants to settle the contract in cash will have to pay or receive the difference between the spot price of the contract on the settlement date and the futures price decided beforehand, since it is impossible to effect the physical ownership of the underlying securities. The main advantage of cash settlement in derivative contract is high liquidity because of more derivative volume in cash segment. Moreover, the underlying stocks in derivative contracts has constricted bid-ask spread, and trading in such stocks can be effected at lower impact cost. If the stock is liquid, the impact cost of bigger traders will be lower. Further, an adverse move can be hedged. For example, the investors can take a covered short derivative position by selling the future while still holding the underlying security. फ्यूचर बेच दिया और सिक्योरिटी होल्ड करी हुई है, तो उससे शॉर्ट कर सकते हो. Also, a liquid derivative market facilitates the trader to do speculation. The speculative trading may worry the regulators, but it is also true that without speculative trading, it will be impossible for the derivative market to stay liquid. Next question is importance of IRDA, Insurance Regulatory and Development Authority. Regulation of insurance sector, protection of policyholders' interest, awareness to insurance market, development of insurance product, competition in the insurance sector, saving and investment of individual, government responsibility, bank and post offices, individual lives, stock market, Indian economy. Regulation of insurance sector. IRDA has a significant effect on the overall regulation of Indian insurance sector. In order to keep the proper protection of the policyholders' interest, Insurance Regulatory and Development Authority closely observes the different activities of the insurance sector in India. Keep the proper protection of the policyholders' interest. Protection of policyholders' interest. Core objective or purpose of the Insurance Regulatory and Development Authority is to protect the interest of policyholders, and IRDA is doing that with aplomb. Awareness to insurance. In order to increase the awareness of insurance in the society, IRDA is trying to convince the prospective investors about the transparency of the system and the effort being put by the regulator to put this into practice. Awareness to insurance. In the society, IRDA is trying to convince the prospective investors about the transparency of the system and the effort being put by the regulator. Insurance market. Insurance sector has grown leap and bounds due to the concerted efforts of Insurance Regulatory and Development Authority with respect to marketing of insurance products, competition and customer awareness. Development of insurance products. IRDA has brought a revolution in the development of insurance products. The development of ULIP is the result of privatization of the insurance sector. Development of insurance product. Insurance Regulatory Development Authority has brought a revolution in the development of insurance products. The development of ULIP is the result of privatization of insurance sector. Competition in the insurance sector. After the advent of privatization in the insurance sector by inviting private players, competition in the insurance sector has increased significantly, leading to comparatively cheaper services and greater customer satisfaction. Saving and investment of individual. Insurance Regulatory and Development Authority has made insurance a popular and profitable mode of investment and inculcate saving habits among various sections of the society. Saving and investment of individual. Insurance Regulatory and Development Authority has made insurance a popular and profitable mode of investment and inculcate saving habits among various sections of the society. Government responsibility. Insurance Regulatory and Development Authority has make it sure that uniformity in the insurance sector is being ensured by helping in constant increase in the number of insurers, increasing competition, number of diversified products and diversification in the activities of the insurers. Banks and post offices. Insurance sector is now giving security against any kind of uncertainty or risk. So the insurance sector has now become a popular medium for savings and investments and is gradually diverting the flow of funds from bank and post offices to insurance industry. Banks and post offices. Insurance sector is now giving security against any kind of uncertainty or risk. So the insurance sector has now become a popular medium for saving and investments and is gradually diverting the flow of funds from banks and post offices to insurance industry. Individual lives. Insurance Regulatory and Development Authority has helped in developing an understanding of insurance by putting across a great impression over the life of a common man of the society. Individual lives. Insurance Regulatory Development has helped in developing an understanding of insurance by putting across a great impression over the life of a common man of the society. Stock market. Private players in the insurance have developed ULIP in order to attract more customers. ULIP is a byproduct of modern insurance market. Therefore, insurance products have made it simple for the companies to raise funds and have also attracted various sections of the societies to invest in stock market indirectly. Indian economy. Insurance Regulatory and Development Authority has an impact over the economic development of the country because money invested by investors or individuals in various types of insurance products has channelized the fund of a country for a non-economic activity to economic activity and has made available to the government of a country in order to implement the various developmental activities in the country. The co-location or proximity hosting is a facility which is offered by the stock exchanges to stockbrokers and data vendors, whereby their trading or data vending system are allowed to be located within or at close proximity to the premises of the stock exchanges and are allowed to connect to the trading platform of stock exchange through direct and private network. Moreover, pursuant to the recommendations of the Technical Advisory Committee of SEBI, stock exchanges are advised to allow direct connectivity between co-location facility of one recognized stock exchange and co-location facility of other recognized stock exchange. ये तो कुछ नया क्वेश्चन है भाई. Co-location of proximity holding in a facility. Co-location or proximity hosting is a facility which is offered by the stock exchange to stockbrokers and data vendors, whereby their trading or data vending systems are allowed to be located within or at close proximity to the premises of the stock exchange and are allowed to connect to the trading platform of stock exchange through direct and private network. Pursuant to recommendations of Technical Advisory Committee of SEBI, stock exchanges are advised to allow direct connectivity between co-location facility of one RSE and co-location facility of other RSE. Stock exchanges are also advised to allow direct connectivity between servers of a stockbroker placed in co-location facility of a recognized stock exchange and servers of the same stockbroker placed in co-location facility of a different recognized stock exchange. This facility should be available to all the co-located brokers who are desirous to avail such connectivity in a fair and equitable manner. Further, in light of the public comments received and in consultation with Technical Advisory Committee of SEBI and Secondary Market Advisory Committee of SEBI, and in order to facilitate small and medium sized members who otherwise find it difficult to avail co-location facility due to various reasons including but not limited to high cost, lack of expertise in maintenance and troubleshooting, etc., to avail co-location facility. SEBI has directed the SEBI has directed कहाँ गया यार SEBI has directed the stock exchange to introduce managed co-location services. Under this facility, space or rack in co-location facility shall be allotted to eligible vendors by the stock exchange, along with provisions for receiving market data for further dissemination of the same to their client members of the facility. The following factors may be particularly be kept in mind while assessing factors relating to industry: product life cycle, demand supply gap, barriers to entry, government attitude, state of competition in the industry, cost conditions and profitability, technology and research. तो कॉस्टिंग में हो गया. कॉस्टिंग में पूछता है ना क्या क्या होता है भाई. फैक्टर्स रिलेटिंग टू एन इंडस्ट्री. Product life cycle. An industry usually exhibits high profitability in the initial and growth stages, medium but steady profitability in the maturity stage, and a sharp decline in the profitability in last stage of growth. Demand supply gap. Excess supply reduces the profitability of the industry because of the decline in the unit price realization, while insufficient supply tends to improve the profitability because of higher unit price realization. Barriers to entry. Any industry with a high profitability would attract fresh investment. The potential entrants to the industry, however, face different type of barriers to entry. Some of these barriers are innate to the product and the technology of production, while other barriers are created by existing firms in the industry. Government attitude. The attitude of the government towards an industry is a crucial determinant of its prospects. State of competition in the industry. Factors to be noted are firms with leadership capability, and the nature of competition amongst them in foreign and domestic market. Type of products manufactured: homogeneous or highly differentiated. Demand prospects through classification with customer wise, area wise, changes in demand patterns in the long, immediate, short run type of industry. The firm is placed wise growth, cyclical, defensive, or decline. Cost conditions and profitability. The price of a share depends on its return, which in turn depends on profitability of the firm. Profitability depends on the state of competition in the industry, cost control measures adopted by its units, and growth in demand for its products. Technology and research. They play a vital role in the growth and survival of a particular industry. Technology is subject to change very fast, leading to obsolescence. Industries which update themselves have a competitive advantage over others in terms of quality, price, etc. Cost conditions and profitability, technology and research, state of competition in the industry, government attitude, barriers to entry, demand supply gap, product life cycle. These are the factors relating to an industry. C. Last है. सी में क्या पूछा है? नो एमएसएमई यूनिट कैन टेक ऑफ विदाउट मॉनेटरी सपोर्ट. This need for finance can be classified into following types: long term and medium term loans, short term or working capital requirements, risk capital, seed capital, marginal money, bridge loans. Financial assistance in India for MSME units is available from a variety of institutions. The important ones are commercial or regional rural cooperative banks, SIDB, Small Industrial Development Bank of India, refinance and direct lending, SFCs, SIDCs, state financial corporations, example Delhi Financial Corporation, State Industrial Development Corporations. Long and medium term loans are provided by SFCs, SIDB, and SIDCs. Bank also finance term loans. This type of financing is needed to fund purchase of land, construction of factory building, shed, and for purchase of machinery and equipment. The short term loans are required for working capital requirements, which fund the purchase of raw materials and consumables, payment of wages, and other immediate manufacturing and administrative expenses. Such loans are generally available for commercial banks. The commercial banks also sanction composite loan comprising of working capital and term loan up to loan limit of rupees 1 crore. For loans from financial institutions and commercial banks, a formal application needs to be made. The details of documentation that need to be provided with the loan application are indicated below. Balance sheet and profit and loss statement for last 3 consecutive years of firms owned by promoters, income tax assessment, certificate of partners or directors, proof of possession of land or building, architecture's estimate for construction cost, partnership deed, memorandum and articles of association of company, project report, budgetary quotation of plant and machinery. A sanction or rejection letter is issued by bank after its assessment of the application. After receiving a sanction letter, applicants need to indicate in writing their acceptance of terms and conditions laid down by financial institutions or banks. Subsequently, loan is disbursed according to the phased implementation of the project. In today's environment, there are other choices apart from commercial banks and government owned financial institutions. These include venture capital funds and non government financing companies. Long term, medium term loans, short term or working capital requirements, risk capital, seed capital, marginal money, bridge loans. Now, next is May 20 RTP. May 20 RTP. So इसके तो थोड़े सिमिलर क्वेश्चंस हैं. How financial goals can be balanced vis-a-vis sustainable growth? What is value at risk? Identify its main features. Explain factors affecting economic analysis. Discuss briefly the steps in securitization mechanism. What are the some of the innovative ways to finance a startup? What is difference between management buyout and leveraged buyout? State the purpose of leveraged buyout with the help of an example. question was how financial goals can be balanced vis-a-vis sustainable growth. The concept of sustainable growth can be helpful for planning healthy corporate growth. This concept forces managers to consider the financial consequences of sales increases and to set sales growth goals that are consistent with the operating and financial policies of the firm. Often, a conflict can arise if growth objectives are not consistent with the value of the organization's sustainable growth. Question concerning right distribution of resources may take a difficult shape if we take into consideration the rightness not for the current stakeholders but for the future stakeholders also. To take an illustration, let us remember to fuel industry where resources are limited in quantity and our judicial use of resources is needed to cater to the needs of the future customers along with the need of the present customers. One may have noticed the Safe Fuel campaign, a demarketing campaign that deviates from the usual approach of sales growth strategy and preaches for conservation of fuel for their use across generations. This is an example of stable growth strategy adopted by the oil industry as a whole under resource constraints and the long run objective of survival over years. Incremental growth strategy, profit strategy, and pause strategy are other variants of stable growth strategy. Sustainable growth is important to enterprise long term development. Too fast or too slow growth will go against enterprise growth and development. So, should financial should play important role in enterprise development. Adopt suitable financial policy initiative to make sure enterprise growth speed close to sustainable growth ratio and have sustainable healthy development. Next question is, वैसे ये सस्टेनेबल ग्रोथ एक बार और पढ़ लेते हैं. सस्टेनेबल ग्रोथ इज इम्पॉर्टेंट टू एंटरप्राइज लॉन्ग टर्म डेवलपमेंट. Too fast or too slow growth will go against enterprise growth and development. So financial should play important role in enterprise. Financial should play important role in enterprise development. Adopt suitable financial policy initiative to make sure enterprise growth speed close to sustainable growth ratio and have sustainable healthy development. What is it? Value at risk. Identify its main features. VAR is a measure of risk of investment. Given the normal market conditions is set of period in a set of period, say one day, it estimates how much an investment might lose. This investment can be a portfolio, capital investment, or foreign exchange, etc. VAR answers two basic questions: what is worst case scenario and what will be loss. It was first applied in 1922 in New York Stock Exchange, entered the financial world in 1990s and become world's most widely used measure of financial risk. Following are main features of VAR. Components of calculation. VAR calculation is based on following three components: time period, confidence level, generally it is 95% and 99%, loss in percentage or in amount, time period, and confidence level. Statistical method, it is a type of statistical tool based on standard deviation. Time horizon, probability, control risk, Z score. Z score indicates how many standard deviations is away from mean value of a population. When it is multiplied with standard deviation, it provides VAR. Z square into standard deviation. Control risk can be controlled by selling limits for maximum loss. Probability, assuming the values are normally attributed, probability of maximum loss can be predicted. Time horizon, VAR can be applied for different time horizons, say 1 day, 1 week, 1 month, and so on. Explain the factors affecting economic analysis. Monsoon, inflation, growth rate of industrial sector, growth rate of national income and related measures. Growth rate of industrial in national income and related measures, growth rate of industrial sector, inflation, monsoon can affect economic analysis. Growth rate of national income and related measures. For most purposes, what is important is the difference between the nominal growth rate quoted by GDP and the real growth. After taking inflation into account, the estimated growth rate of the economy would be a pointer to the prospects for the industrial sector and therefore to the returns investors can expect from investment in shares. Growth rate of industrial sector. This can be further broken down into growth rates of various industries or groups of industries if required. The growth rate in various industries are estimated based on the estimated demand for its products. Inflation is measured in terms of either wholesale prices, the wholesale price index, or retail prices, consumer price index. The demand in some industries, particularly the consumer product industries, is significantly influenced by the inflation rate. Therefore, firms in these industries make continuous assessment about inflation rates likely to prevail in the near future so as to fine tune their pricing, distribution, and promotion policies to the anticipated impact of inflation on demand their products. Monsoon, because of the strong forward and backward linkages, monsoon is of greater concern to investors in the stock market too. 15A. Steps in securitization mechanism. Creation of pool of assets, transfer to SPV, sale of securitized paper, administration of assets, recourse to originator, repayment of funds, credit rating to instruments. Creation of pool of assets, transfer to SPV, creation of pool of assets, transfer to SPV, sale of securitized paper, administration of assets, recourse to originator, repayment of funds, credit rating to instruments. Some of the innovative steps to finance a startup are as follows: personal financing, personal credit line, family and friends, peer to peer lending, crowdfunding, venture capital, micro loans, venture financing, vendor financing, purchase order financing, factoring accounts receivables. Factoring accounts receivables, purchase order financing, vendor financing, micro loans, crowdfunding, peer to peer lending, family and friends, personal credit line, personal financing. स्टार्टअप का एक क्वेश्चन तो डाल ही देते हैं. Difference between management buyout and leveraged buyout. Management buyouts initiated by the management team of a company are known as management buyout. In this type of acquisition, the company is bought by its own management team. Management buyouts are considered as a useful strategy for exiting those divisions that does not form part of the core business of the entity. Leveraged buyout, an acquisition of a company or a division of another company which is financed entirely or partially, that is 50% or more, using borrowed funds in terms is termed as a leveraged buyout. The target company no longer remains public after the leveraged buyout, hence, the transaction is also known as going private. The deal is usually secured by the acquired firm's physical assets. The intention behind an leveraged buyout transaction is to improve the operational efficiency of a firm and increase the volume of its sales, thereby increasing the cash flow of the firm. This extra cash flow generated will be used to pay back the debt in leveraged buyout transaction. After a leveraged buyout transaction, the target entity is managed by private investors, which makes it easier to have a close control of its operational activities. The leveraged buyout do not stay permanent. Once the leveraged buyout is successful in increasing its profit margin and improving its operational efficiency, and the debt is paid back, it will go public again. Companies that are in a lending market position with proven demand for product have a strong management team, strong relationships with key customers and suppliers, and steady growth are likely to become the target for LBOs. In India, the first LBO took place in the year 2000 when Tata Tea acquired Tetley in the United Kingdom. The deal value was rupees 2,135 crores, out of which almost 77% was financed by the company using debt. The intention behind this deal was to get direct access to Tetley's international market. The largest LBO deal in terms of deal value, 7.6 billion by an Indian company in the buyout of Corpus by Tata Steel. Last is November 2020 RTP theory questions. So questions are: Key decisions that fall within the scope of financial strategy. What is financial risk? How it can evaluate from point of views. Explain various market indicators. Discuss briefly the problem phrased in growth or securitization of instrument in construct. Startup firm can bootstrap methods. Difference between forward and future contracts. The key decisions falling within the scope of a financial strategy are as follows. Financial strategy, financing decision, investment decision, dividend decision, portfolio decision. ये आंसर तो रटा हुआ होना चाहिए भाई. Scope of financial strategy is financing decision, investment decision, dividend decision, portfolio decision. Financing decision, these decisions deal with mode of financing or mix of equity capital and debt capital. Investment decision, these decisions involve the portfolio utilization of firm's fund, especially in long-term projects, capital projects, since the future benefits associated with such projects are not known with the uncertainty. Investment decisions necessarily involve risk. The projects are therefore evaluated in relation to their expected return and risk. Dividend decision. These decisions determine the division of earnings between payments to shareholders and reinvestment in the company. Portfolio decision. These decisions involve evaluation of investments based on their contribution to the aggregate performance of the entire corporation rather than on the isolated characteristics of the investments themselves. Question number 2. Financial risks is referred as the unexpected change in financial conditions such as prices, exchange rate, credit rating, interest rate, etc. Though political risk is not a financial risk in direct sense, but same can be included as any unexpected political change in of any foreign country may lead to country risk, which may ultimately result in financial loss. The financial risk can be evaluated from different point of views as follows: from stakeholders point of view, from companies point of view, from government point of view. From stakeholders point of view, major stakeholders of a business are equity stakeholders, equity shareholders, and they view financial gearing, that is ratio of debt in capital structure of a company, as risk, since in the event of winding up of a company they will be least prioritized. Even for a lender, existing gearing is also a risk, since company having high gearing faces more risk in default of payment of interest and principal repayment. From company's point of view, if a company borrows excessively or lend to someone who defaults, then it can be forced to go into liquidation. From government's point of view, the financial risk can be viewed as a failure of any bank, like Lehman Brothers, downgrading of any financial institution leading to spread of distrust among society at large. Even the risk includes willful defaulters. This can also be extended to sovereign debt crisis. What are the various market indicators? Market indicators are as follows: breadth index, volume of transactions, confidence index, relative strength analysis. Explain various market indicators. Breadth index is, it is an index that covers all securities traded. It is computed by dividing the net advances or declines in the market by the number of issues traded. The breadth index either supports or contradicts the movement of the Dow Jones average. If it supports the movement of the Dow Jones average, this is considered sign of technical strength, and if it does not support the average, it is a sign of technical weakness. That is a sign that the market will move in a direction opposite to the Dow Jones average. The breadth index is an addition to the Dow theory and the movement of the Dow Jones averages. Volume of transactions. The volume of shares traded in the market provides useful clues on how the market would behave in the near future. A risk a rising index price with increasing volume would signal buy behavior because the situation reflects an unsatisfied demand in the market. Similarly, a falling market with increasing volumes signals a bear market and the prices would be expected to fall further. A rising market with decreasing volume indicates a bull market, while a falling market with dwindling volume indicates a bear market. Thus, the volume concept is best used with another market indicator such as the Dow theory. Confidence index is It is supposed to reveal how willing the investors are to take a chance in the market. It is the ratio of high grade bond yields to low grade bond yields. It is used by market analysis as a method of trading or timing the purchase and sale of stock, and also as a forecasting device to determine the turning points in the market. A rising confidence index is expected to precede a rising stock market, and a fall in the index is expected to precede a drop in stock prices. A fall in the confidence index represents the fact that low grade bond yields are rising faster or falling more slowly than the high grade yields. The confidence index is usually but not always a leading indicator of the market. Therefore, it should be used in conjunction with other market indicators. Relative strength analysis. The relative strength concept suggests that the prices of some securities rise relatively faster in a bull market or decline more slowly in a bear market than other securities. That is, some securities exhibit relative strength. Investors will earn high returns by investing in securities which have demonstrated relative strength in the past, because the relative strength of a security tends to remain undiminished over time. Relative strength can be measured in several ways: calculating rates of return and classifying those securities with historical high average rates as securities with high relative strength is one of them. Even ratios like security relative to its industry and security relative to the entire market can also be used to detect relative strength in a security or an industry. Odd lot theory. This theory is a contrary opinion theory. It assumes that the average person is usually wrong and that a wise course of action is to pursue strategies contrary to popular opinion. The odd lot theory is used primarily to predict tops in bull market but also to predict reversals in individual securities. Next question is, discuss briefly the problems faced in growth or securitization of instruments in Indian context. Why stamp duty, taxation, accounting, lack of standardization, inadequate debt market, ineffective foreclosure laws. Second is methods in which a startup firm can bootstrap: trade credit, factoring, leasing. ट्रेड क्रेडिट, फैक्टरिंग, लीजिंग एंड तीन ही होते हैं. बूटस्ट्रैप. बूटस्ट्रैप के क्या मतलब, बूटस्ट्रैप के मेथड्स क्या क्या होता है? ट्रेडिंग, ट्रेड क्रेडिट, फाइनेंस. ट्रेड क्रेडिट, फैक्टरिंग और लीजिंग. ट्रेड क्रेडिट, फाइनेंस, फैक्टरिंग और लीजिंग. फैक्टरिंग और लीजिंग. Factoring, this is a financing market where accounts receivable of a business organization is sold to commercial finance company to raise capital. The factor then get hold of the account receivables of a business organization and assumes the task of collecting the receivables as well as doing what would have been the paperwork. Factoring can be performed on a non-notification basis. It means customers may not be told that their accounts have been sold. In addition to reducing internal costs of a business, factoring also frees up money that would otherwise be tied to receivables. This is especially true for businesses that sell to other businesses or to government. There are often long delays in payment that this would offset. This money can be used to generate profits through other revenues of the company. Factoring can be a very useful tool for raising money and keeping cash flowing. Leasing. Another popular method of bootstrapping is to take the equipment on lease rather than purchasing it. It will reduce the capital cost and also help lessee person who takes the asset on lease to claim tax exemption. So it is better to take a photocopy machine, an automobile or van on lease to avoid paying out lump sum money, which is not at all feasible for startup organization. Difference between forward and future contracts is as follows. Trading. Forward contracts are traded on personal basis or on telephone or otherwise. Futures contracts are traded in a competitive arena. Size of contract. Forward contracts are individually tailored and have no standard size. Future contracts are standardized in terms of quantity or amount as the case may be. Organized exchange. Forward contracts are traded in an over the counter market. Futures contracts are traded on an organized exchange with designated physical location. Settlement. Forward contract settlement takes place on the date agreed upon between the parties. Future contract settlements are made daily via exchange clearing house. Delivery date. Forward contracts may be delivered on the dates agreed upon. And in terms of actual delivery, future contracts delivery dates are fixed on cyclical basis and hardly take place. However, it does not mean that there is no actual delivery. Transaction cost of forward contracts is based on bid ask spread. Futures contracts entail brokerage fee for buy and sell orders. Marking to market. Forward contracts are not subject to marking to market. Futures contracts are subject to marking to market, in which the loss on profit is debited or credited in the margin account on daily basis due to change in prices. Margins are not required in forward contract. In futures contract, every participant is subject to maintain margin as decided by the exchange authorities. Credit risk. In forward contract, credit risk is borne by each party and therefore every party has to bother for the credit worthiness. In futures contract, the transaction is a two-way transaction, hence the parties need not to bother for the risk. So जितने भी RTP थी, 4 RTP न्यू सिलेबस की, उसके सारे थ्योरी के आंसर्स कंप्लीट हो गए.